maintenance and all that kind of stuff of the factory, then that type of thing we can't apply to a specific job as well necessarily, and therefore we're going to put it just into this big bucket of overhead and apply it out to the jobs based on the predetermined rate. So that's what's happening here. Once again, we're basically paying payroll, and you might have in your head, well, we should be debiting payroll expense when that happens. And we're not debiting payroll expense because the people who did work have not helped us generate revenue yet. They helped us generate the asset of inventory, and more specifically, we're going to put it into the factory overhead. So we're going to put it into factory overhead. It's already been applied out in this problem to work in process. That's why we have a credit balance here. So we're going to debit factory overhead, which has already basically been applied out. So we're going to copy the factory overhead. We're going to put it in C16, right click, and paste it 1, 2, 3. All right, so we're going to make this a bit smaller. I'm going to scroll down to 80. I'm going to scroll over here a bit so we can see more of our general ledger. Here's the factory overhead that we're going to post it to. Here's where the factory overhead is, almost the third to last asset. So here's the factory overhead on the, that's not factory. Factory overhead's down here. Here's factory overhead on the general ledger in U26. So U26 equals, we're going to point to that 14,000. And so you can see a little bit more of that, and enter. And now we basically have over applied it at this case. Now it's back to 98. What's happening here is it looks like we've applied out way more to the job than the cost that we have had yet. But that could happen because we haven't yet got through the month yet. So we've applied it out before we actually incurred the cost in this case. Okay, so then we're going to go to the second half, which is cash. So here's cash on the trial balance, here's cash on the general ledger. We are in the credit side, so we are in R10 equals, point to that 14, that's going to bring cash down and put us back in balance. Notice that we posted to the factory overhead. We do not need to do anything with the job cost sheet in that case, because we don't do anything with the job cost sheet until we allocate it from factory overhead to the work in process, which we had already done for overhead, which is that 109. All right, going to make this larger again, make it back up to 100% on the taskbar. Scrolling back over to the left, we are now on 130, which says that amounts applied to factory overhead. So here's all the other stuff that basically is we're paying for, but we don't know which job to post it to. We're going to take this one item at a time. So the first one is indirect materials. So indirect materials, is cash affected? No, all we're doing is transferring the raw materials to, in this case, not work in process, but to overhead. Reason being, these are going to be materials that we couldn't apply directly to a job, such as like glue or something like that, or if it was grout in a construction job, things that it would be too tedious for us to try to apply that out to the job, even though we do want to, we would be too tedious to apply it out directly to the job. I don't know how much glue we used to make the job because we didn't count the glue because it would take too much time and money to do so. So we're just going to dump it into the overhead account and then apply it out using the predetermined rate. So this account's going to go down, the raw materials. It has a debit balance. We're going to make it go down with a credit. So I'm going to copy that. I'm going to put it in the credit by going under the date, right click, and paste 1, 2, 3. Also note that some problems might have two raw material accounts, meaning one for direct raw materials, one for indirect raw materials. Some may not, so just be careful on, depends on what type of problem you're looking at. And that's going to be a credit of 30,000. Then we're going to debit something for 30,000, and all the debits for these ones are going to go into the factory overhead. So these are the things that we couldn't apply to the job. Factory overhead is overdrawn right now, so it's really kind of an asset. It should have a debit balance until we apply it out, but we've already applied it out. That's why it has a credit balance. So we're going to copy the factory overhead. We're going to put that on top, right click, and paste 1, 2, 3. Okay, let's make this a bit smaller and post it out and do these one at a time. So we're going to post this to the general ledger. I'm going to scroll over a bit so we can see more of the information. So we're going to post the factory overhead, which is here. Here's factory overhead on the trial balance and factory overhead on the general ledger. So we're going to debit factory overhead in U27. So U27 equals, I'm going to point to the debit of 30,000, bringing the balance back towards the debit. So it's a credit, it's going towards the debit of 65. It's still overdrawn. We got the raw materials here. So here's the raw materials on the journal entry. Here's the raw materials on the trial balance. Third account, here's the raw materials on the general ledger. And we are in Q25 equals, we're going to point to that, whoop, I'm in the wrong side here. Should be in the credit side, I'm in R25 equals, we're going to point to that 30,000. This is a debit, that's a credit, those are opposites. This will go down. Puts us back in balance over here. We're going to make this larger again, scroll over and see what we have next. So we've got factory utilities. Okay, I'm going to assume we paid the utilities with cash. So, and again, some problems will try to say that we didn't pay with cash, we got a utilities payable, but I'm just going to say, and the reason they do that is because they want to show you in the journal entry that it's for utilities, and you can't see that if we paid cash. So let me show you what I'm talking about there. But in this problem, I'm going to assume we paid cash. So cash for utilities, cash as a debit, we're going to make it go down by doing the opposite thing to it, which in this case is a credit. So I'm going to copy the cash. I'm going to skip a line, and I'm going to skip another line to put it on the bottom. Credit's going to go on the bottom, and the credit is going to be for that 12,000. I'm going to represent the credit with a negative 12,000. We're going to debit something for 12,000. And again, a lot of people are going to say, well, it's utilities. I should debit utilities expense if we paid for utilities. But remember that the utilities expense is on the warehouse, in this case, or in the factory. Therefore, it needs to go into the asset. But we don't know which job to apply it to, so we can't put it into work in process. Therefore, we're going to put it into the factory overhead. So I'm going to copy the factory overhead. That's going to be the debit. Right-click in C22, paste it 1, 2, 3. Then I'm going to make this small again, or smaller, down to 80 on the taskbar. We're going to scroll over. We're going to post factory overhead again. So here's factory overhead. Here it is on the trial balance. And here it is on the general ledger. We are in U28 equals, going to point to that 12,000. And once again, we're less overdrawn here now because we already applied it out at the 109. So now we're at the cash. So here's the cash. Here's the cash on the trial balance. Here's the cash on the general ledger. We're going to post it in Q11 equals, and we're going to point to that 12,000 and enter. All right, so we have that one. I'm going to make it larger again, back up to 100, scroll back over. And we're out of room, therefore we're going to have to unhide over here. So remember, we hid some cells at the beginning where we have A, B, C, D, F, L, and there's some hidden cells there. So we're going to highlight. I'm going to put my cursor on E so we can see the drop down. Left click, drag over to L, let go, right click on the selected area, and unhide. So we're going to unhide those cells. So there we have those. Then we could hide these cells. Now, I don't need these cells, so we could hide B to F now, and they'll still be there. Do not delete them, but we're just going to hide them. I'm going to put my cursor on B, scroll over to F, let go, right-click on selected area, and hide. Okay, so we had just recorded the utilities. Now we're going to record the factory rent. So once again, I'm going to assume that we paid the rent with cash or a check. Therefore, is cash affected? Yeah, we're going to say cash is going to go down. And so there's cash, has a debit balance, and we're going to make it go down by doing the opposite thing to it. So I'm going to copy it, and I'm going to put that on the bottom, right-click, and paste 1, 2, 3. The amount's going to be for 20,000, negative 20,000 cash paid. We're going to debit something for 20. And again, you might be saying, well, we should debit rent expense. And again, we paid the rent, but it's on the factory. So the factory rent was not yet used to help generate revenue. Therefore, it can't be an expense under the matching principle. It needs to be included in the asset and expensed when the asset is sold, because that is when it's used to generate revenue. So we're going to put it into factory overhead because we don't know which job to apply the rent to. Therefore, we're going to put it into factory overhead. So we're going to copy factory overhead and paste it 1, 2, 3. Now, I was going to point this out. Notice that if you were to look at this journal entry, you couldn't tell that this was paid for rent. And if it was a prior problem, we saw rent expense, we would say, oh, well, rent, that means it's paid for rent. But what if we dump it into factory overhead? We can't tell that. That's why a lot of problems will actually say we didn't yet pay the rent, but we incurred rent. Then it would go into rent payable. And part of the good thing about that type of problem is that you can see the rent payable tells you that the journal entry is for rent, but it also is kind of confusing because we haven't usually we pay the rent with cash. So just keep that in mind. If you see some problems that have a lot of payables in it when you start working with the factory overhead, that's because they're trying to make the journal entry show you what the journal entry is for, even though you can't really see it in the journal entry unless you had a description of it. All right, so we're going to post this out. I'm going to make this a little bit smaller. And then you're going to scroll over here a tad. And then, so here's the factory overhead. Here's the factory overhead on the trial balance. Here's the factory overhead on the general ledger. We are scrolling down to U29 equals. I'm going to scroll up a little bit. I know I'm way down there. And there's that 20 and enter. And we can see that once again, we're still overdrawn, but now we're overdrawn by 333 or over applied, I should say. And then we are over here on the cash. So here's the cash on the trial balance, here's cash on the GL. We're on the credit side in R12 equals. We're going to point to that 20,000. That's going to bring the cash account down and put us back in balance. Okay, let's bring it up a little bit, back to the taskbar, back up to 100%. We are now on, we just did the 20, we're now on the last one of these, depreciation on the factory. All right, so we know what our depreciation journal entry is. We usually debit depreciation expense and credit accumulated depreciation. However, once again, we're not going to debit the expense. Why? Because when we depreciated this, we used that times of use on the equipment to help generate an asset, not revenue. So the depreciation was not used to generate revenue, therefore it cannot be an expense under the matching principle, which is an accrual principle. It should be included as part of the assets, that asset being part of inventory. We don't know which job to post it to, therefore we're going to put it into factory overhead rather than work in process. So factory overhead, we're going to copy that. That's going to be another debit, once again, to factory overhead, and we're going to credit the accumulated depreciation, just like we would if it was a normal depreciation transaction. So I'm going to copy that and paste it here. Why? Because once again, the building's on at this amount, and we're going to increase the contra asset, which will decrease the book value from, in this case, the 357 down by 30,000. So we're going to have the 30,000 debit and 30,000 credit. All right, I'm going to make this a bit smaller, back down to 80%. We're going to scroll over here a tad. Here's the factory overhead on the journal entry. Here's the factory overhead on the trial balance. Here's the factory overhead on the general ledger. So notice all this stuff, this bucket of stuff we're dumping into factory overhead because we don't know what job to put it into. We've already applied it out, but now we have the actual costs and expenses that we are putting in here. Equals, we're going to point to that 30,000 and enter. So now we're only overdrawn by 3. So our estimate was pretty good. We estimated 109 and we're off by 3,000 in this case, so that's not too bad. And then we're at the accumulated depreciation. Here it is on the trial balance, and it's our last asset over here on the general ledger as well. So we are in Z14 equals, and we're going to point to that 30,000 and enter. And note, there's nothing unusual about that side. Remember that that's related to the equipment, so that means the accumulated depreciation went up, book value then went down, because the book value is this minus this, debit minus the credit. 327,000 is how much the asset is on the books for at this time. We're going to make this large again on the taskbar. We're going to scroll over to the left, and we're finally done with that overhead stuff. We're going to go down to the transfer of jobs from work in process to finished goods. So at this point in time, we have work in process here. It's backed up by the job cost sheets. The work in process by definition means that the work is in process and not yet completed. And at some point it will be completed, hopefully, and therefore it will then be transferred from uncompleted work in process to completed work in process. And in this case, we are transferring jobs 14 and 15. Congratulations, we have completed those jobs. We're going to transfer the amounts in those jobs to finished goods. So that is going to happen on 131. So 131, what's going to happen is finished goods is going to go up and work in process is going to go down. We're going to have to look at the job sheets to see how much by, because whatever in the job sheets, that's what it's going to be, the amounts that we're going to use. So we're going to have the finished goods going to be debited though, because it's an asset that's going up. Right click, paste it 1, 2, 3. the work in process is going to go down. It's an asset with a debit balance. We're going to make it go down by doing the opposite thing to it, which in this case is a credit. And then the question is, well, how much? And if we scroll down here, we're looking for job 14 and job 15. So we're going to scroll over all the way over to our job sheets over here.